Another day where we see nervousness in equity markets, probably driven by what we see in the Middle East and the potential for US involvement there. So European futures down, US futures down, but we will be without the liquidity there, of course, because we don't have US trading. What are you watching when it comes to that overall risk appetite story?
I think it's going to be an overall directionless day. We've got some micro themes given all the central banks on tap, so it's going to be exciting for day traders, but I'm not expecting a new macro theme yet. I think the backdrop picture here is the Fed sent us a message saying they're worried about the stagflation risks, but they're not going to try getting ahead of it. And I think that's a slightly negative message overall for stocks, for the dollar. It's not helping the whole general kind of negativity around US assets, but no one wants to trade it aggressively in the low liquidity. So I still think we're kind of drifting along, waiting for the next big catalyst. And I think it's more likely, given where we're priced, given how optimistic people are on trade, on the tax bill, I think it's more likely that any big next surprise catalyst is a negative one that comes up. So we're kind of waiting, playing the short-term central banks in the interim.
Well, in the meantime, let's focus on one central bank in particular. I think of the Fed, the BOE is getting a lot of attention, but Mark, I have my eye on the S&B. There is a possibility out there of negative interest rates, not the consensus, but a possibility of negative interest rates out of the S&B. In this environment, can you just walk us through what negative interest rates might mean for a risk-off currency like the Swissy?
What's amazing about the Swiss franc is theoretically a currency, but in reality, it's a financial asset. In the same way that gold is theoretically a commodity, but in reality, it's a financial asset. The closest comparison between those two assets is each other. Gold and Swiss franc are both portfolio diversification assets. That's what they really are. And those trump the fact that the Swiss franc is theoretically a currency and trump the fact that theoretically gold is a commodity and used in jewelry. And they both, in a world where one of the world's most important kind of haven currency and most liquid, and the most important haven assets in treasuries are both getting a little bit undermined at the margin. Let's not be dramatic about that. That means that people are seeking more of these alternative havens, and Swiss franc and gold both qualify in that regards. So the reason I give all that preamble is essentially the Swiss franc does not trade like any other currency. Fundamental inputs don't drive it. It drives on geopolitical factors. So really, whether rates go negative or not won't decide the future of the Swiss franc. At some point, we're going to go, hey, we want to be more risk-loving and we're going to bail out of the Swiss franc, but not while there's so many risks around the world kind of keep on flaring up every week.
OK, yeah, having to deal with all of those global dynamics in their own domestic situation. Mark, let me ask you about the dollar. We see the dollar stronger today, not by much, but up 0.1% or so. Has it found renewed haven status here through this geopolitical tense period, or is this more about Fed policy?
You know what? I've been so disappointed by the dollar price action. As you know, I'm a structural dollar bear, but I thought we'd get a bit of a short-term dollar squeeze higher. We've got a little bit of one, but not much at all. And I have to say that the Fed message last night, the stagflationary message, isn't particularly positive for the dollar. So I feel like the short squeeze is running out of ammo very quickly. And that emphasizes the fact that the world is structurally overexposed to the dollar, even if fast money is short at the margin.